My name is Mike Sullivan. I'm a former IRS revenue officer. I've worked about 10,000 cases. Me and my M&M man give you a thumbs up for listening today. My YouTubes are mainly short. They're right to the point. They're targeted for your problem, so you're not listening to a lot of crap. And over the 10,000 cases I've worked, probably 10% of them are 941 payroll cases and trust fund taxes. So I want to give you some good options for if you owe trust fund penalties or for IRS business taxes, 941 payroll taxes, and maybe an upcoming trust fund tax debt that you may be looking at. So for people who owe IRS business taxes in the form of 941s, as a revenue officer, I'd come out to your office, knock on the door, come in, show you my commission, and I'd say, yeah, we have a debt. The very first two questions I ask, and they fill my heart with joy. I says, A, are all your returns filed? Have all your tax returns filed? Two, are you current on your 941 tax deposits? If you are listening to this video and you are not there, make sure even if it's today, start making your first tax deposits. You don't have to catch up, just start making your first one and make sure all your tax returns. This puts the IRS at ease that you're not running up extra penalties and interest. You understand you had a problem and now you want to work on the back box. That is the most important tip I can give you. IRS can consider and contemplate closing your business if you're running up debt. It's serious debt. They're not going to give you a break. They're going to come down. So you want to do that first. You just want to show IRS you're making an effort. By the way, if you have a small case, you can manage these by yourself. Big cases, you have no business representing yourself. IRS or agent can just take you to task on that. The next thing that they're going to do is they're going to ask for a 433B business financial statement and a 433A personal financial statement. The IRS is going to look at both your business and your personal life to see where the money is, what your assets are. So you have to be prepared and know how to fill out those 433Bs. The 433B, the business financial statement, the 433A personal financial statement. It's an art. You have to prepare them and know what IRS is going to look for. On a business or personal financial statement, they're basically looking at assets, business receivables, and they want to know what your income is to your personal and business expenses. They're going to comb through them carefully to find out if they can suck any monthly income from you on either the personal or the business side. So as an IRS agent, I'd come out and investigate both. But looking at the business right now, once I come out and determine that you have an ongoing business, you want to stay in business, the next thing I have to do is say, okay, how am I going to resolve the debt? So I'm going to be looking at assets. I'm going to be looking at liquidity values that you have. I then especially going to be looking at, do your expenses make sense? Are you taking money out of your account personally? And then I'm going to look at the trust fund recovery penalty. The trust fund recovery penalty simply means I am going to take a part of your 941 debt, which is your withholding and Social Security portions on the 941, and I'm going to transfer that to you individually, and that's called the trust fund recovery penalty or the trust fund recovery assessment. Don't agree to that. If you can not agree to that, that's fine, because IRS can have two assessments, one against the business and one against you. So if this is going to become a personal assessment on a 941 tax, the IRS can only impose, if you look at your 941, the withholding, and half of the Social Security, the money you actually held in trust gets transferred to you. So IRS can have your business tax and your personal tax too. That's why you always want to appeal that. So if you have a real serious problem, understand IRS is going to come out. They're going to do all sorts of searches. They may pull a Nexus Lexus on you. They may go ahead and check your credit cards. They're going to do a full asset search on you, check the accurate search engine, find out what's going on. They're going to comb your receivable list. They want to make sure you're spending the money you need to, and anything they can collect for themselves, they're going to want to do that. Don't get pressured by just signing the agreement to get IRS off your back. Don't do that. That's the point. You need to go to a professional if they're starting to pressure you. Do not let that happen. So you got to be also prepared for this trust fund penalty that's coming out. More than anything, you must have an exit strategy for this debt. You just can't say, oh, the economy is going to get better, this is going to turn around. I've heard those so many times. You have to have someone from the outside, whether it's your accountant, a friend, somebody, us, take a serious look at this business and say, hey, should you be open? What's your exit strategy? Are you going to make a payment agreement? How much is it going to cost you to keep your business open? And is it really worth it to do that? It's much better to get this consult before IRS knocks on the door than after. So understand, if you owe payroll taxes or business taxes, you have to understand the trust fund penalty, the assertion against you for that tax goes with it. They go hand in hand. I hope you appreciate this information I give you. It's really important. I get subscriptions because it lets YouTube know that I'm giving you the information you need, and they place value on my content, and a like. And if you have comments, please leave them. If you have questions for me, I'll probably make a YouTube video on that. Thank you for your time. I hope I was helpful to you. I appreciate you.